Hi everyone, I am Maricela Tejada and I am doing a presentation on Chapter 8, Business Crime. So, to begin, what is a business crime? Well, there are 3 types of business crimes described in our textbooks, and those are crimes against corporations, crimes corporations commit, and crimes within a corporation. So, a crime against a corporation would be like securities fraud, illegal practice of using deceptive tactics or manipulation to profit from buying or selling securities. This includes crimes like insider trading, Ponzi schemes, and misrepresenting a company's financial health to lure investors. Corporations commit crimes such as fraud, bribery, and embezzlement, which can be both financial and non-financial. Crimes within a corporation would be illegal acts committed by individuals for benefit of the corporation, including offenses like fraud, bribery, embezzlement, and antitrust violations. So, the question that I thought everyone could keep in mind while we go through this presentation would be, who is the victim of a business crime? So the 5 essential definitions I thought we could go over are the business crime elements, which are actus reus, scienter, mens rea, obstruction of justice, and liability. So there was a lot of information, but I wanted to talk about these because if we go out and start businesses, we should know how to protect ourselves. So, actus reus, physical guilty act of the offense, which can be an action or an omission combined with the required mental state. For a business crime like fraud, the actus reus could be the physical act of misrepresenting financial data, while the mens rea is the intent to deceive. The scienter in business crime is the mental state of intent to deceive, manipulate, or defraud. It is a required element for many fraud cases, including securities fraud and false claims act. Mens rea means that the person knowingly and intentionally committed the crime. The example I usually give for accidentally committing a crime is usually like a tax crime. And that might be like you took the wrong write-off or you thought that something was deductible and it wasn't. Obstruction of justice is willfully interfering with administration of justice, and that could be convincing witnesses to lie, forging documents, tampering with evidence. And the last thing is who is liable. So for a corporation, the officers and directors are liable if they authorized the conduct or if they knew it was going on and did nothing to stop it or correct it. So why do you need to know about business crime, and why know these 5 terms? Because you want to be able to protect yourself. When we took our ethics class for our undergraduate degree, these 5 terms, I'm going to go back to this slide, sorry. These 5 terms were important because it's not just about being able to say that was a crime, but it's about being able to understand why people commit a crime. So, mens rea is definitely, one of those, like it has to be intentional. And then the others are important as well, because part of ethics and committing these type of business crimes is knowing the mental state of the person who could potentially commit the crime. And I'm sorry, I'm getting distracted here. So let's protect ourselves and protect our companies or the companies we work for. And should you be worried about business crime? Like I said, looking at these definitions again, yes, you should. And I'm sorry, I'm getting distracted again. So let's look at this case study. So for a case study, I thought I could talk about a company I worked for. There had been a partnership. The partners divided, and myself, as well as some other people, including the office manager, went to go work with one of the partners. He became very ill. He was hospitalized. He was in an induced coma, and he had just started the recovery process when the IRS came by our office. And they said that we owed a very large sum of money to the IRS for unpaid taxes. I think they were quarterlies. And they needed an immediate payment. And it was a very large payment that had to be done right away. And we were under this impression that we had no funds and no money. We had been just barely scraping by. Everybody had taken pay cuts. We were barely able to make payroll. We were barely able to order materials. It was really hard times. And so we all became very suspicious when all of a sudden the office manager just wired a huge sum of money to the IRS when she had been telling us for many weeks that there was no money. And then immediately after, she quit. So what we ended up discovering was that she had been stealing from our company that we worked for the whole time we had been there, which had been a couple years. And we strongly suspected that she had been stealing from the previous company we worked for all of the 16 years that they were in business. She had set up our network for us when we started the new company, and she had set it up so that everybody was connected to this little server we had, except for her. Her computer was separate from the server. We did not have a cloud backup for anything. She was the only person who had access to our financial software. She was a signer on our checking account in case something happened to the president of the company. She could continue to pay bills. And she was also the person who printed our payroll and signed our payroll checks. So what we ended up discovering was she had been stealing. She had been using company credit cards for personal use. We all took pay cuts, and she gave herself a raise. Even the president of the company took a pay cut, and she still gave herself a raise. She had complete access to all of our checking accounts, so we did find out she had used our accounts for some personal purchases, which she had tried to mask but was not able to hide those as well as she had been able to hide other things she had done. When she left, she shredded every financial document in her office. She left some things that looked like financial documents, but they were not. And I don't know if I had already mentioned this, but she called our IT consultant and spoke to the owner and convinced the owner to send over a technician and wipe her hard drive clean. And when we later called our IT consultant and asked to have a technician come to try to restore what had been removed from the hard drive, we were given a very firm no. It turned out she had not been paying taxes. She had not been paying payroll taxes. And so we were in a whole world of trouble there. So mens rea, yes, she definitely had mens rea. She definitely, I'm going to go back to this slide real quick. She definitely had knowingly and intentionally committed a crime. The scienter, she definitely had the intent to deceive, manipulate, and defraud us, defraud the company. And she did obstruct justice. She convinced that company to come and wipe her hard drive. She shredded everything. That was only touching on what we knew. And definitely the owner, or not the owner, the president of the company was liable for everything she had done. We still had to pay vendors. We still had to make payroll. We still had to pay quarterly taxes and payroll taxes. Those were not going to go away. So how do I think we should apply this? I think we should apply this as a cautionary tale for how to avoid being a victim of business crime. And the reason that I say that is because I have worked for many companies, and this is a very common thing. Actually, when we hired a payroll company after she left to do our payroll, and when we were setting up our account, the person setting up our account with us said that when companies were setting up their payroll after similar situations, they said that it is the most common thing for somebody like our office manager who has been committing these kinds of crimes to shred everything. So I'm going off on a tangent. I apologize. Here is how I think this should be applied. Number 1, hire a professional. And if you don't think you have the need or can afford a full-time professional for your, startup, for your new corporation, or even for the corporation where you currently work, even like if you're a nonprofit or something like that, hire a consultant to go through your finances and make sure that everything is good, to audit for you. Hire a professional HR person. I cannot tell you how many times I have heard or talked to people who own businesses, and they have had to pay tons of fines because they didn't know something like, about anything. They didn't know that you couldn't not pay your payroll taxes. They didn't know that you have to pay an employee within so many days of when they resign or are terminated. Have a code of ethics. Our textbooks strongly suggest having a code of ethics, having your employees sign and read a code of ethics. This is as a form of protection, like if something were to happen, you could defend yourself, but really it is also a way to deter people from wanting to do any type of theft. Have good internal controls. This is like accounting 4A. It is like a very basic accounting principle. Have good internal controls. Obviously you should have some kind of document backup. Have like a cloud. Have more than one person have access to your financial software. Have more than one signer for your checks. The list of internal controls goes on, but have good internal controls. Be transparent. Encourage transparency. And the reason I say that is not because I think, secrets are bad, but it is actually in our undergraduate ethics class that we took, we learned that these type of crimes are often a result of opportunity and need. So if somebody has a need, they want to up their retirement, so they do, whatever, securities fraud, or they want to make a lot of money, so they take kickbacks, or, in the case of our office manager, they just saw this opportunity there to take money, and so they took it. And the other is they have a need. They have a need because of, whatever reason. But anyways, being transparent helps discourage that, because if there is a lot of transparency, even if it's only within your finance department, it discourages those type of crimes, because it's obvious that if somebody were to commit that type of crime, like a crime within the corporation or against the corporation, that it would be very obvious, like, if I'm going to take this bribe from this vendor, how obvious will it be? I am the only person in purchasing and nobody knows what I do. As opposed to, if I take this bribe from a vendor, how obvious will it be? Our whole finance department is open. We're very transparent. It would be very obvious to everybody. Would I get caught? Yes. That's what I mean when I say transparency. So, in conclusion, I asked the question, who is the victim? And I think it's a 360. I think everybody is a victim, whether you're the employee who got shorted out of your paycheck, or whether you are a vendor who is now not getting paid because the company had to close because of these types of crimes. So let's not be victims of a business crime. Let us be proactive and protect ourselves well. And these are my references. Thank you.